On to your markets news now. Asian markets rose in the last session of the week, taking their cue from U.S. markets, which was spurred by the U.S. Fed's decision to cut interest rates by 50 basis points. This, as optimism has increased, the U.S. economy will avoid going into a recession as the Fed focuses more intensely on the labor market there. The Nikkei share average rose by 1.53%. The Hang Seng Index closed up 1.36%, while the Shanghai Composite Index ended the session up 0.03%. U.S. markets were enthused by the heavy rate cut levied by the U.S. Fed, believing it will go a long way in ensuring a soft landing in the U.S. economy. While all stock indexes were up, the Nasdaq rose the most on the day. The Dow Jones Industrial Average rose by 1.26%. The S&P 500 gained 1.7%, while the tech-heavy Nasdaq jumped by 2.5%. The JSE is currently trading higher, with the all-share index up by 0.4% at 84,114 index points. The rand is trading at 17.56 against the US dollar, 23.33 against the British pound, and 19.60 vis-a-vis the euro. Looking at commodities, gold is trading at $2,612 an ounce and platinum at $986 an ounce, while Brent crude oil is trading at $74.56 a barrel. Patrice Rousseau is Chief Investment Officer at Ashburton Investments. A very good afternoon to you, Patrice. So the 50 basis points rate cut from the Fed appears to be firing US and other markets. But now that this uncertainty has passed, does the market now go back to focusing on economic fundamentals as well as sector and company performance?
Good afternoon to you, Nampu, and to all your viewers. Indeed, very good question. The markets were expecting a rate cut. I think the camp was divided between those expecting 25 basis points, and we got 50, which was double what was initially expected. There were a little bit of concerns on the day that maybe the Fed was seeing something on the horizon, which we talk about a severe recession or something which would be more sinister. But after that, as you say yesterday, I think there is more optimism that the Fed and other central banks are cutting rates ahead of a recession, or might even be able to preempt a severe recession. So the mood is that the globe will avoid a severe recession or a recession altogether, and the Fed being quite early by cutting 50 basis points will help them not fall behind the curve. So we've had already the ECB, the Bank of England, cutting rates, the BOJ this morning, and the Bank of China were on hold. So I think the general mood is that as rates come down, that will help overall lift the global economy.
Indeed, a good trend for consumers. So, of course, our very own Reserve Bank, they cut interest rates by 25 basis points, pretty much in line with expectations. Are you hopeful of consistent cutting going forward? And what does this mean for the local markets? I mean, if any investors, are watching, should they have placed themselves in certain companies or sectors in order to benefit from the upside that would come from a range of interest rate cuts?
Yeah, very good questions. If you recall, we went from interest rates below 4% to 8.25%. So we've had the governor cut 25 basis points yesterday. So we've got quite a long way to go. The Reserve Bank talks about rates stabilizing above 7%. So let's say another full 100 basis points or 1% to go. We actually think the Reserve Bank might cut more than that, more than 1%, and this will provide relief in terms of the over-indebted consumer and also the cost of living in South Africa, and also more importantly, I think stimulate investment. But because, the cost of funding will also go down. Yeah.
One of the concerning pressures raised by the Reserve Bank, though, has to be the electricity price. Now some households are having to choose between whether they charge up their meters or buy food. It doesn't appear to be sustainable, although we have been reporting here on SABC News that it looks as though the Minister of Electricity and Energy is also, you know, piping up about this, that it's not sustainable. Surely we need a solution to this, because the cost of doing business, the cost of living just becomes impossible.
Yeah, I think very good question on your side. I think we all feel it through our back pockets. The cost of electricity has indeed risen way above inflation in the double digits. And the concern is that there's also a view that there needs to be some clawback, whereby the cost of producing electricity is going ahead of what the increases have been in the past, which is also even more concerning. I think the reality is that expectations of electricity hikes of 20% plus, I think, cannot be stomached by the consumer. So there is now politically a view that maybe those who qualify for free electricity, the kind of limit that was given before, I think 50 kilowatts must be lifted. There's also a view that there must be more pressure for Eskom to operate in a more productive and efficient manner to avoid such big hikes in prices, which the consumer is not able to stomach.
Yeah, and very quickly, one of the things that's happening is that commodities are picking up very nicely, and that includes the oil price. Now, if the oil price consistently continues to go up, that could actually reverse the gains in terms of bringing down inflation. How concerned are you about that?
Yeah, I think at the beginning of the year, there were concerns that what was happening in the Middle East would translate in higher oil prices. So far, that hasn't flared up. I think with the stronger exchange rate, the cost of oil in rand terms will be coming down. So we've seen consecutive months of fuel price decreases, and we are of the view that that will continue. So in rand terms, I think we find, and the fuel price at the pump should still be coming down.
All right, Patrice, more to ask you, but not enough time. Thank you so much for your insights there, Patrice Rousseau. He's Chief Investment Officer at Ashburton Investments Management.